everyone. A very good evening. You're watching The Money Show on ET Now. I'm Ubina Kapasi. This is the show where we talk about personal finance, where to put your money, how to invest your money, and of course also how to spend it in the right manner. So it's quite an action-packed day that we have today on the show. Let's take you through the menu for today. First up, well, we'll be talking about the whole fiasco around Lakshmi Vilas Bank or LVB. Yes, largely we do have clarity. We had a conference call as well held by LVB's administrator, for the course of the next 1 month. Money is safe, but I think it sort of once again rakes up the important question that how are we as lay people essentially supposed to understand which bank is a strong bank to bank with, who will not face such issues. I think assessing that is extremely important, and I hope that with our conversation with a very important guest, we'll be able to help you out in deciding on how you can go about banking. Later we'll also be talking about misselling of financial products. This is something that we've been seeing a lot happen online, offline. Especially senior citizens are often sold products that promise very, very lofty returns, but sometimes if it's too good to be true, it perhaps is too good to be true. So how do you essentially identify when a product is being elevated to a position which will not be able to return, and when genuinely there is promise in a product is what we'll be discussing. We'll be joined by Gaurav Rastogi of Kuvera. Later on the show, in our Meet Your Fund Manager segment, Shreyash Devalkar, who's a senior fund manager with Axis Mutual Fund and also, by the way, is the fund manager for the Axis Multi-Cap Fund, will be joining us. As we know, now there is a new category of mutual funds, the Flexi Cap category. So what exactly will Axis Multi-Cap be doing? Will they be switching over, relabeling their fund to Flexi Cap? What can unit holders expect from the multi-cap, from Axis's multi-cap fund? That's what we'll discuss in our Meet Your Fund Manager segment. And later on the show, gold versus Bitcoin. If you guys have been watching ET Now, we've been telling you about how Bitcoin is at a 3-year high. This is something that's definitely very interesting, and we'll be telling you more about that. In fact, there have been people who've been drawing parallels of Bitcoin with gold. Can it really compete with the safe haven asset? We'll be discussing that. So first up, let me introduce on the show Gaurav Rastogi, founder and CEO of Kuvera.in. Gaurav, a pleasure having you with us today. Thanks so much for joining in on ET Now. Gaurav, let's first talk about the fact that we have this moratorium on Lakshmi Vilas Bank customers. Thankfully, the RBI has stepped in early, as we know, and and any which ways in the history of Indian banking, customers have never lost their money. They've at least got back something or the other. But in this case, I think we can draw a bit more comfort comparatively. What would be your take, to LVB customers? Would you advise them to right now just stay calm, be patient, and perhaps later on, if you want, after the whole merger with DBS goes through, withdraw all your money, if you're not comfortable?
Yeah, so first things first, right? So far, most of the banking kind of crisis that we have seen in India, the depositors have not lost money. But PMC Bank, to be honest, is still under moratorium. We don't know how that will play out. If you are a depositor with Lakshmi Vilas Bank, to be honest, there's not much you can do. There's a 25,000 rupee withdrawal limit. So if you have an emergency, if you need that money, you should withdraw it. The good thing is, and I think the thing that RBI did very well is that they announced the moratorium and they also announced the merger with DBS India. And DBS is a very well-established bank in Singapore, very strong balance sheet. So I think post-merger, it's actually going to be a much stronger bank than it used to be. Still, if you feel like, you went through a bad experience and you want to withdraw money, you could, but you have to now start thinking of it as a depositor of DBS India Limited, and that's a pretty strong balance sheet right there.
Gaurav, the key question over here is that how can I as a customer essentially decide what bank is good, what bank is safe, which bank's financials are okay? I mean, I may not be that financially savvy to read things like NPAs and, to read things like capital adequacy ratio. So how, I mean, and banking is the very basics today. Everybody has a savings account, everybody has at least a fixed deposit. So how can one decide what are the parameters you advise people look at before they're choosing a bank to bank with?
This is a very, very interesting question, a very important question as well, Mubina, because like you rightly said, not everyone is going to look at NPAs. And even if you're someone who can, look at NPAs and who can understand it, how can you be absolutely sure that the bank is actually reporting the right level of NPAs? And we've seen that with Yes Bank, right? With Lakshmi Vilas Bank, actually, they were reporting the right level of NPAs. And the NPAs were deteriorating over the past 6 to 9 months. So someone who was tracking it could see that it's above 20% now. So what RBI did would not have come as a surprise. With Yes Bank, that didn't happen, and suddenly one day the management just said that okay, the NPAs have to be repriced higher by a pretty large margin. Um, so it's very hard actually, to be honest, with banks, especially unless you're a forensic accountant, right? Unless you can really get down and dirty with the numbers, it's very difficult to kind of figure it out that way. There are other markers though. There are definitely other markers, right? If a bank is higher, if bank is offering an FD rate which is much higher than market, that's usually a very clear sign that they have a need for capital. They have a need for, and that's why they're willing to offer anywhere from 6.5 to 7% returns on FD, while most of the banks, the most large banks, are offering 3.5 to 4%. In banking, size does matter. I mean, I know that it's almost like perverse to the banking system when you say that a certain bank is too big to fail. But when you think through on how a regulator actually thinks about banking and what the regulator's biggest fear is, which is to avoid a run on the banking system as a whole, then a mid-size or a large bank is more likely to kind of get a lot more support than a smaller bank. So those are kind of some of the markers you can look at, but it's very, very hard to have some kind of a predictive model. I mean, people have come up with different kind of scores to create some numerical methods of saying that which banks are in a strong position and which banks are not. But even there, the predictive ability is very, very low. So know that if you're getting a higher FD return, then there is something there that could backfire for you in the next few years. And also realize that at least in banks, larger banks are safer just because of the regulatory environment.
All right. Well, generally, largely, that's of course not to say that this is as a rule, because we have seen big banks as well face problems. Take, for example, Yes Bank. So, as a rule, larger banks do tend to be a little more safer, primarily because they do have that more active support, from various corners of regulatory bodies, including the government. So I think that would always be sometimes a better option for individuals to choose. So for now, of course, Lakshmi Vilas Bank customers, nothing much really that you all can do. Just wait it out. DBS India, of course, is a big bank, and if this merger does go through, remember we are saying if, the hope is that it will be concluded by the 16th of December, and then this whole embargo moratorium will be lifted. People will be free to withdraw all their money out as well if they want. But yeah, DBS India as well, it's a big bank, it's an MNC bank, so if it shouldn't really be too much of an issue really. But let's talk about the other topic, and that's with respect to financial mis-selling. Gaurav, I was seeing a couple of tweets from your end about how you are actually seeing an increase of cases where many individuals, especially senior citizens, have been missold products. They perhaps, this can come in various forms. They've been promised a certain amount of return, or there's somebody who's called them and asked them to deposit their money, and then there's no account created or there's nothing that's happened. What are the most common cases you've come across, Gaurav?
Actually, some of the kind of what we have seen, and let me just kind of start with a bit more context. So it's not like we do see that the elderly are disproportionately missold, but I don't think they are specifically targeted. I think what is happening here and what kind of our read of the situation is that they are more likely to do offline banking. So they're more likely to kind of go to a bank branch or meet a distributor. And in private conversations, it's easier to make promises than that you don't have to write down. And I think that is what creates this environment. And what we see mostly is actually very barbelled. So we do see a lot of senior citizens being sold fixed maturity products, which is not a good product for them. Being sold, like life insurance policies with like 5 years, 10 years lock-ins for someone who's above 60 is not probably a very good idea. And we see that also on the younger end, someone and for the elder citizens, mostly what the stories we are hearing is it happens at a bank branch. They go to a bank branch and they want to kind of take money out of an FD or kind of reset their FD, and instead they are kind of told that, hey, you know what, you'll get a slightly higher return, but do this ULIP kind of a unit linked insurance policy. On the younger side, people are starting their investment journey. They are also, what is happening is that a ULIP product is being sold as an insurance plus investment product where your money will grow. Again, with promises of returns which are most likely not going to get materialized, at least historically they've not been. And given where we are, it's unlikely that those investments will materialize, those returns will materialize. And there, I think the story is that it's usually someone that you know. It could be your parents' broker or their insurance agent or someone like that's trusted by the family. And because you don't know, it's your first job, it's your first sphere of income, you're taking advice from within the family, and that's how that misselling happens. But we're seeing it on both spectrums. Definitely more on the elderly side because if you think about who goes to bank branches anymore, it's usually people who are above the age of 50 who still go to the bank branches. Most of us have trained or retrained ourselves to use bank apps or banks online websites. And a lot of this mis-selling is very hard to do online or on apps.
So, how can individuals essentially identify that, okay, this looks too good to be true, like I mentioned, or this one perhaps looks a little legitimate? What are the telltale signs of the same?
It gets telltale signs, right? And this is true for kind of all verbal contracts. If they're not willing to write it and send it to you on an official channel, right? That means it's not a promise. This is kind of a lot of this mis-selling also kind of preys upon the greed of the recipient. Someone comes to you. This is kind of what in the earlier days people used to call ki 15% to mili jayega, right? Like at least you will make 15% because see, if you have invested in the past 6 or 7 years or in terms of ULIP, they would have a very idealized kind of returns and cash flow streams, and they would pick up the best scenario and they would show that the returns will be so high. Plus, you will get insurance. So this is a fantastic product, right? But as soon as you ask them the question, okay, can you write it down and send it to me that I will get minimum this much returns? They'll back off. Of course, they can't guarantee returns. Return guarantee is just, I mean, it's outright illegal, so they can't do that. And that is usually the biggest telltale sign. The biggest telltale sign, if you want to be kind of like, feel really, really protected, is to say that, you know what, everything you're saying sounds fabulous. And I really want to trust you. Can you send it to me in writing from your official email ID? And if they say that they can't do that because हम लिख के नहीं दे सकते हैं or because there are chances that this may not happen, then that's the biggest sign that whatever you're being promised is not uh, a definitive event that this will happen. It's more a probabilistic event that there is a 5% chance it will happen. And that should be the biggest way to catch whether something is too good to be true or something is a genuine promise made to a customer.
So it's a very simple thing, really. Whatever promises, whatever assurances, guarantees, and yes, they do come in these forms as well, that the seller is giving you verbally, ask them to write it down on a piece of paper and give you. If there is hesitation on the part of the seller to do that, that in itself is your first telltale sign that something looks fishy, and it's better that you stay away from conducting any such transaction. And like Gaurav said, sometimes it's all about greed as well. We've seen so many cases in the past too, where on the temptation of earning 16-17%, Goodwin Jewelers was one such case, right? So on the temptation of earning so much money, people have often sort of gone for all of those lucrative or at least lucrative sounding deals, and in turn they've lost their money. So I think that's a very important aspect. You know what, on that note, we'll take a very short break. Gaurav, stay on with us, folks. If you would like to talk to Gaurav about your instances, a case that you may have come across of financial mis-selling, or if you have any questions about somebody trying to sell you a product, you can write into us on the money show at etnow.tv. We'll get your questions answered. Okay, welcome back. You're watching The Money Show on ET Now. We're in conversation with Gaurav on essentially how many a times we've seen instances of people being missold financial products with all these lofty promises and grand promises of a certain kind of mouth-watering return, and sometimes that really does not end up being the case. Gaurav, what I love about one of your tweets as well is your focus on senior citizens, because you mentioned that they tend to be a bit more vulnerable to falling to these kind of traps. For all the individuals watching, if they have older citizens, maybe in their homes, maybe in their neighborhoods, maybe in their societies, it would be great if they can educate these senior citizens on this topic. So how do you recommend this education be imparted to these senior citizens?
A couple of things we recommend, right? See, the first thing is to kind of help them learn a banking or a financial services app. Like I said, right, financial mis-selling, online financial mis-selling is infinitely more harder than it is in a private field. Because online, what happens is your interests are protected by really smart users who understand what you're trying to do. So someone will call you out, right? So a bank app cannot kind of try and mis-sell something, because another bank user will say, hey, you know what, your app is recommending this and this is not right. So the first step is to kind of get them to, there is a learning curve involved, right? And a lot of times what happens is the elderly in the family may not want to kind of learn online banking, but kind of sit with them, teach them. It's not that hard, and I think usability of a lot of banking apps have improved dramatically. A lot of investment apps have improved dramatically. So I think that should be your first target, is to kind of don't let them get into a position where they are in an office with a relationship manager, or they are in an office with a broker or an agent, which creates which creates that whole environment where that mis-selling can happen. Now, if that cannot be done, then the second thing is what we discussed, is kind of tell them to get everything in writing before they sign on any documents. Right? Before you sign up for any product, just say that everything that you've promised to me in person, can you send it to me on an official email? Elderly also happen to be less financially savvy, but you can give them a few tips. So one of the big things is bundling of products, right? So if there is a product that is bundling insurance and investment, or if there is a product that that has multiple features, usually bundling is done so that some of the fees can be obfuscated, or some of the fees can be hidden behind that whole bundling, where you can show that, hey, you know what, you're getting so many benefits, so that you never ask the question, okay, but what is the cost of this product? Or you never unbundle the product and say that, oh, I can actually get the insurance also for cheaper, and I can also invest for cheaper. So if it's a bundled product, then be wary of that. Why is it bundled? Is it absolutely required for it to be bundled? Sometimes bundling is important, right? And ELSS is a tax-saving instrument and a mutual fund. There, the bundling is a necessity because that's what the law says. But otherwise, if it's not for a very specific purpose, avoid bundling. For especially for the elderly, right? Like tell them to one big flag for them is they should never sign up for a products that have lock-ins. So if it's a fixed maturity plan, even ELSs, they should only sign up if they have enough liquidity elsewhere. Lock-ins are a very good tool for the young because you stay locked in and you don't kind of get out of the asset class too quickly. You stay invested for a very long time and you kind of build the habit. But for elderly, unless you have enough liquidity elsewhere, you might be locking in money that you might need in the next year for an emergency. The same thing happens for an insurance plan. If you have to keep on paying insurance, kind of, if you have to pay that annual amount, you're locking in money that you might need for an emergency, and that could be a very bad product for you. So that's another one that we kind of recommend. And finally, I think, and in India, I think some of it is reduced now, but a lot of especially the ULIP mis-selling sometimes happens with friends and family members. And sometimes what happens is with our parents' generation, they might find it very hard to say no to them. And I think that is also something that frank conversation that hey, you know what, if someone is trying to sell you a product and they're close to you, they might have been your friends or they're the family or you've known them for a very long time. But if the product is not right for you, then saying a polite no is not a bad option. Or is actually the right option here. So that's what we recommend. Um, it's ideally people would say why don't you educate them about all the financial products, but those things are very hard, so it's easier to kind of have simple rule of thumb, and say that if any of this rule of thumb is being broken, then be very wary that you're being missold something. And if you're not clear about a product, if you're not sure about a product, tell them to call you to discuss it with you so that you can actually guide them better.
All right. Okay, well, I hope all of you have taken down notes, and I hope you educate, your fellow citizens, your neighbors, your parents, your relatives as well with respect to the same. It's of utmost importance that you do so. Well, let's take on board some queries. I think we'll have time only for one. So our first question is from Naren Swami. He says, markets are at record highs. Is this a good time to start my SIP? I have no other investments except for FDs. So let's assume that Naren wants to invest for the long term, but he's not yet got about doing so. And now, it's always this characteristic, right, Gaurav? When the markets are down, when COVID happened, you're too scared to put your money, and now markets are at record high. So now you're wondering, oh gosh, it's too expensive. How do you get over such a dilemma?
um, the easy answer, of course, is to say that, hey, you know what, I'm going to do a 10-year SIP no matter what. I'm going to start today and I'm not going to stop this SIP for 10 years, right? That's the easy answer. That's the right answer. Historically, if you look at it, then even at market highs, if you do a 10-year SIP, you will have good returns. And plus, it's a high today. We don't know what is going to happen next year, right? Next year Nifty could be even higher. Even if you look at the past 4 or 5 years, right? Every year we hear the same story. Every year people say, "Hey, it's a new high. It's a new high. Should I continue to invest? Should I start investing now?" And almost always the answer is that yes. If you have surplus, if you don't need the money for in the next 5 to 7 years, if your investment horizon is a long investment horizon, and if you are 100% sure that you're not going to stop that sip, then start today because it's very hard to say where the market will go from here, right? I mean, in hindsight, it's always like you rightly said, right? In March, when everyone should be investing, everyone should scared because everyone thinks oh, it's going to go down to 6,000 or so. And then today, when it bounces back, then everyone will be like, oh my God, I should have invested then. But now it's already at, whatever, 12,000, blah, blah, blah. Should I wait for it to get down to 10,000? Now, a lot of that is just wishful thinking. It's almost impossible to predict which way the market will turn. So uh, think about things which are under your control. So make sure you don't need the money in the next 5 to 7 years. So you have that runway. Make sure that you don't stop this sit for the next, whatever, at least 7 years. And then just start today because, otherwise you'll keep on second guessing and eventually one of the two things will happen, right? Maybe the market will correct, then maybe you'll get scared and still not start the trade. Or next year you will say, oh my God, I should have started, and then you will start chasing and you will start investing a lot more than you should have invested because you want to catch up. So if you have surplus capital, you can do a SIP. The best thing is to start.
All right. Gaurav, we'll let you go on that note. Thank you so much for joining us. It's always a pleasure having you with us on board. And yes, folks, you can always find this episode on ET Now's YouTube channel under the Money Show playlist. For now, we'll take a very short break.